Right, here we are. Welcome to another live stream. Thank you for those of you who are joining. I know it's maybe not the best time, Friday evening or afternoon, depending where you are in the world. But as I said, I thought I'll do this more regularly, and was really excited about doing this portfolio review, which I thought of yesterday. So if you guys like this, I'll make this a more regular affair. I got a few of those portfolios from you, so thanks for sending it through. And I'll review those a little bit later on. Let's touch on and start with a little bit of news. What happened the last few days, quickly review the markets, and then we come to the portfolio reviews, and in the end, as always, we'll finish with some Q&A. We can ask me any questions. So, I'm not gonna read all the questions right now. I'll get to this in the end, so keep them coming. I'll get back to them later on. So yeah, let's dive right in. What have we seen this week? Hope everything, you can hear me well, because this time I'm doing it on the big screen. That's easy on the phone. You just press one button. Now I have the whole software connected. So hopefully it works out well and you can hear me guys all good. Right, with this, let's jump in. A couple of things here over here. Obviously, first one, you might have seen the news with Sam Altman. Seems to be every day almost in the news these days. The CEO and founder of OpenAI, not just working on all the amazing, basically AI things, obviously for the future, but where funnily enough, he doesn't even have any equity or any significant equity in OpenAI. So even if one day they would go public, he wouldn't really make much money from it. I'm sure he has a decent salary, but he wouldn't be a billionaire just by listing OpenAI. Obviously, they have been invested heavily by Microsoft, but still, he doesn't have a big stake in it. But apparently, he did acquire quite a significant stake in Reddit at the time, many years ago, who knows. So now he is worth 600 million just from basically having those shares listed. Now, of course, remains to be seen how the stock is doing. And I did a poll just yesterday asking my followers on Instagram if they would invest. The majority of you, myself included, said they wouldn't be investing into an IPO. And I'm always against it. I mean, right now, when you look obviously at Reddit, it's only been a day since yesterday. So it's fairly stable. Obviously, it dropped a little bit, came back. But usually what happens in these kind of IPOs on the first few days of trading, there's huge swings, right? I remember, for example, one of the companies that did that not so long ago was Rivian. Let me pull it up over here. Rivian, the electric car company. Rivian. Oh, here we go, Rivian. You can see at risk of poor performance after so much hype around it when they started listing. You can see over here, everybody was excited, the next Tesla Challenger, what have you. And then guess what happened? From there, it just went downhill. And I mean, they might be soon out of business, right? So many other companies, for example, even Coinbase, right? Coinbase, one of the biggest crypto exchanges out there. Let me pull that one up over here. Now they have come back now recently because they're quite correlated with the price of Bitcoin. So you can see they came back and they did quite well again. But given from where they used to be back in the days, at the very peak over here, only now they're slowly making a comeback. So once again, it begs the question, is that really something you would want to spend all your money in and speculate? I think if you really want to gamble, in my eyes at least, then better gamble in things that have a higher upside where you can see the numbers, then better go with some tech stocks like Nvidia and what have you, because at least you can see some numbers. Here, you're purely speculating. So, I mean, kudos to Sam Altman. He got in early, so that's great. If you manage before the IPO, that's great. And when the IPO drops, you liquidate. So I think that's always a smart approach. If you can afford this, to have equity in the company prior to launch, that's when you cash in, right? And a lot of them are selling at that launch. But to get in once it launched, you as an investor buy the shares then, I think you really, it's the same as going to the casino. I mean, you're literally just hoping it will do well, but you have no idea of knowing. So yeah, I'm usually not a big fan of that, of getting in at IPOs, and haven't seen too many people doing too well over there. What else? Let's look at my share, because I haven't bought my stocks this week yet. Normally I share them obviously with you guys, but so far I haven't seen much movements in my favor. Usually I look at for some drops in my portfolio. You can see right now my interactive brokers holding on Seeking Alpha. And actually today is not a bad day, I must say. Quite a bit of negative, which in a way It's counterintuitive, I understand. If you see that, you think, well, Guy, you should be upset about it, but I'm a long-term investor, right? So I buy these things. When they drop, I'm happy. I can buy more of it. For example, LIGHTYEAR is a sort of smoking tobacco company, dropped by 2%, so that's a significant drop. And obviously, I might go into there and see what happened for the day, why they dropped so much. But sometimes a couple of bad news comes down, maybe some regulations didn't pass or unfavorable regulation came out. So these things happen. Blackstone, 2% as well, which is really quite nice. Even BlackRock, a company I really would like to have more of, it's 1.7% down. So in general, quite a red day, which is actually pretty good, to be honest. As I said, I haven't bought any stocks this week yet, but I did buy a bit more crypto. I'll get to this in a second. But yeah, overall, probably going to scoop up something here today. So we'll do a bit of deep dive. In general, I like LIGHTYEAR, just to show you why. Obviously, yeah, they have been a bit on a downward trend as well in recent time. When we look at the dividend you can get right now, I mean, that's 8.72%, came down a bit. It used to be close to 10% recently. So yeah, that's pretty juicy. If you're a dividend investor, definitely one of the nicest stocks. But yeah, so we'll see what I'm going to buy, but looking not too bad. With regards to crypto markets, of course, I think that's always interesting as well to look at, especially in recent times when things were really booming and everything was going up. We now see, oh, sorry, my lamp dropped off here. I think you can still see me, I hope. But yeah, in recent times, obviously, crypto popped quite a bit. In general, it's always led by Bitcoin. If Bitcoin does well, everything else is doing well, right? And we see the last few days, actually, it came down quite a bit. You can see here for 7 days, you know, Bitcoin down, Ethereum down even more. And that's so strange. I'll probably do a whole separate video on Ethereum. For me, you know, I have quite a little part in Ethereum. It's around 10% of my crypto holdings. And recently they've done an upgrade, which they hyped about so much before. So I was really hoping that it would pop a little bit more. But in general, to be honest, of course, if you go for 1 year trend, you still see very nice numbers over here, no question about it, for the all time as well. So usually it follows obviously the crypto trend in general with Bitcoin. But yeah, overall for the 1 month, not too impressive, I'll be honest. And as I said, in a separate video, I'll probably speak about reasons why I'm planning to sell my remaining Ethereum and move it into Bitcoin. I want to go, you know, all in on Bitcoin, even though, of course, when I see here some of those coins, look at this book of meme. I never heard about this before, but it's absolutely wild. When you look what happened here, where is it? The last few months, it went up. Where is it? 1,400% in 1 month, and has a market value, a cap, basically like a company has a market valuation of almost $1 billion. It's absolutely insane. You know, it's just some random meme coin, and there's just crazy times out there, which usually also indicates if all those meme coins and random crappy coins are popping, that's usually when we're at the peak of a hype cycle, right? So that's usually a warning sign not to go too heavy into the crypto markets. But overall, again, I'm long-term bullish on Bitcoin. I've done a few videos on this in the past. I really believe that's going to be here to stay, and yeah, quite excited to where it's going to go in the future. I think that price, you know, while some people might say it's expensive, I think a couple of years from now we will say, oh my God, I wish I would have bought it 63K. But again, I understand if people feel a bit too risk adverse for it. It is definitely right now still a very new asset class, so we don't have much track record. But I always find it interesting when people say, well, crypto is too volatile, but at the same time they invest into an IPO. I mean, for me, an IPO, once again, coming back to the first slide I showed you, it's way more risky because you have zero track record, right? You just hope, a lot of hopium. Here, at least, I mean, we have, what is it, since 2009, I believe, Bitcoin really started. So I have, what is that, 15 years of track record. So at least something tangible. So I much prefer that, to be honest. When we look at the overall assets in the world by market capitalization, so once again, market capitalization is basically the total supply in circulation times the price of that supply per unit. So when we look at all of the valuable things outside, of course, we don't have real estate here and fiat currency because that's a little bit hard to value. But apart from that, we have pretty much all other asset classes out here. Of course, still gold remains to be the biggest by market cap with $14.5 trillion. Seen a bit of a bump in recent times, but overall, as you might know by now, I'm not a big gold fan. I don't think it's gonna do too well in the next few years, but again, that's just my own humble opinion. Then, actually, the second biggest asset in the world as such is already Microsoft, which is just unbelievable. Look at it, 3.1 trillion. And leaving Apple in the dust a little bit. In recent times, Apple dropped off quite a bit. I mean, they used to be for many, many years the biggest company in the world. but they dropped off quite a bit, obviously. Various reasons for that. One of them missing the AI hype a little bit. I do hope that in summer, when they come out with iOS 18, they will introduce a bit more AI. I think they want to natively integrate it with Siri, so I think it's going to be good and interesting. But yeah, in terms of price, they really dropped the ball a little bit there, which of course, if you're a long-term investor and bullish on Apple, might be a good entry point into the company, you know. So again, it's funny, human psychology, when something drops, people panic and say, oh, maybe I should sell. No, if you really believe in the fundamental value of it, maybe it's a good time to buy, right? But you know, this is human psychology. We all sometimes subject to that. And then, of course, we see some of the other companies, and we see here now again dropped off a little bit Bitcoin. It used to actually be ahead of silver, but these things are very fluid and move quite frequently. Again, long term, I think 1.2 trillion for Bitcoin. We will see way higher numbers. I have zero doubt we're soon going to be the second highest after gold. But once again, that's just my humble opinion. Read the big Bitcoin standard, and after this, you might feel also a little bit different about it. Right, with this, let me see if everybody's online and we have any questions. I mean, I'm going to answer the questions afterwards just to see everything works. Cool. All right, got some comments there. That's fine. So let's dive into some of the portfolios here I got from you guys. So the first one is actually from a follower and subscriber for quite a while now. And the gentleman, I believe, is still younger than 20 years. So really, first off, congratulations for having such a portfolio at such a young age, $21K, $27,000. Kudos to you. I mean, really amazing performance. If I go here, you can see really consistent growth over time. You see here is overall returns, $5,000, really impressive numbers. I mean, once again, at such a young age, I mean, I didn't have such a portfolio, so well done. It shows you really taking this serious and finding sources to invest. So great job. And yeah, when you look at this portfolio, I really like it's very clean and very clear, and he has a very clear strategy, because you will see oftentimes beginner investors, they buy a bit of everything. They hear they should buy some ETFs, so they buy a bit of that. Then they hear they need to have some growth stocks or dividend stocks, they buy a bit of that. It's a bit all over the show. Here you can really see the gentleman maybe, you know, still goes to school or studies or has a few jobs to make some income and says, I maybe don't have time to individually check all those companies, and that's why I buy ETFs, and not just one. I mean, I'm a big fan of just, you know, having a couple. He has a few of them, but essentially it's set it and forget it, right? Maybe he even automates his plan, so it's automatically invested every week or every month, so he doesn't have to worry about it, and you can see the results of it. I mean, all in the green. All of his ETFs are in the plus. Some more, some less, but all of them doing very well. If you would have looked at individual companies within those ETFs, a lot of them would be in the red, right? So he might be losing out on those, but here is actually doing very well. And yeah, I mean, I must say, very smart approach, right? If that works for you, you have to understand what works for you. Don't blindly follow what somebody told you on the internet. Myself included, I have my vision, but your vision might be very different for your own investment journey. That's why it's very hard to give general investment advice, because some are very young and want to take full-on risk and high reward. Maybe they don't like ETFs at all and go into Bitcoin. So I really like his approach. It's very clear. It shows he has done his homework. And yeah, I mean, when you look at the ETFs, obviously he has the classic one, and the biggest weighting of his portfolio, the most money, is in the Vanguard S&P 500 ETF, which is smart move, I think. It makes sense. That's the ETF that I buy myself as well. It's a distributing ETF, so that's really cool. Then his second biggest position is the Vanguard FTSE All World ETF. So what you can do always is take that, let's see, you can just, 1 second, I'll go back into this, and you can take this abbreviation V, see, this is the ticker symbol basically, and if we go over to Just ETF, which is a great website, VWRL, you can pop this over here, and then you can see the breakdown of the ETF, because a lot of those abbreviations sometimes can be a little bit overwhelming. So I always like to go in and see what it is. Now, basically, it gives you all the details, what it is, the chart, and what have you. And I really like the holdings, because you want to know what you're actually holding with that one. So in many ways, to be honest, when you look at it, the top 10 holdings of that one is very similar to his first ETF. So there's a lot of overlap, right? Because the first one is S&P 500, and actually all those companies you can see here are pretty much the top 10 in the US right now, meaning the top 10 of the S&P. So that way he already bought them twice, with the first ETF and the second ETF. And you can see that's because the countries are very heavily skewed and weighted towards the United States. So US had the biggest share in there, followed by a couple of other countries. So it is a global sort of, as it says, all-world ETF, but not really. Often when they say global, majority is still pretty much based in the US, which is the strongest stock market in the world, right? There's no way around it. You can see different sectors and so on. So again, if he wants that, that's fine. I understand to have a bit of diversification. Long term though, one thing I would consider is the fact, I mean, first of all, obviously he has a lot of holdings. So that means he has 3,600 stocks on there. Now he doesn't have to manage that. The fund manager, in this case Vanguard, is managing for it. So that's good. But keep in mind, your expense ratio is 0.22%. So if, let's say, you make a, 6% return, now you actually make only a 5.78% return, right? That's the percentage that the management company, in this case Vanguard, takes for managing it. Now it's clear that such a fund is more expensive because they have to manage many different shares all over the world and follow them. So it's naturally more expensive than if you only look into one stock market. But what I'm trying to say is, if you're really conscious about, diversifying for the sake of it, then fine. But be aware that you do have high expense ratios across different ETFs, obviously. The same with some of the other ones. Again, I'm not going to go into every single one of them. Interesting that he has specifically one on Japan. Again, maybe he knows more than us and believes in Japan. But yeah, interestingly, overall, I like that he's diversified. He has one on tech, specifically on technology, one only on emerging markets, and one on developed Europe, and of course Japan. So in general, it makes sense to me. It is globally diversified, even by sectors. But just once again, for yourself, go through and see how much overlap you really have and what are the expense ratios. Go through all of them and see how expensive they are, because a lot of them, for me, anything over 0.1%, I find it quite expensive because there are way better options out there. Actually, my next video is going to be about the cheapest ETF for Europeans to buy on the S&P 500. You'll be shocked how cheap it is. So I think looking at 0.22%, in my eyes, it's just way too expensive. Right, so let's go to the next portfolio. 1 second, I will pull that up on my phone. I got a few on Instagram sent to me, so thanks for that. So I'll try to pull it up over here and hope it will make sense. Good, so I hope you can see that now. So yeah, that's another portfolio from another subscriber. Look, so I think he does it on Yahoo Finance, as I can see. I used to use Yahoo Finance as my tracker. It's not bad, it's a free tool, but I'm using now GetQuinn, the tool I just shown you before. The gentleman was using, I use myself, especially for dividends, because Yahoo Finance is not really good to track dividends. So if you don't invest much in dividends, it's fine. But otherwise, I'm not a big fan of it. But yeah, you see here a nice crypto holding. I mean, you can see here stock, his purchasing price was 33K. And now he's sitting at 63K. So, almost a $30,000 profit. So well played. Really nice over there, I believe. As I understand. Okay, so that's the purchasing price, the price, his total, I understand, sorry. His total portfolio is 14.5, but still a gain of 6,800 euros. So really not too shabby. The question is always, when do you sell, right? Some people say, BTC might reach 1 million eventually. So if you sold now, he might be upset. If it goes down to 20K, he would happily sell right now and materialize the 6.8K and then buy it at a cheaper price. Again, that's a question you have to answer for yourself. Again, I'm a long-term investor. I don't know in the short term what the price will do. I think we'll see more roller coaster up and down. That's why I'm just going to add to the position whenever it drops. But I would even buy Bitcoin at 100,000 because, again, long-term, I'm very bullish on it. Then he has also another portfolio here, which is 1.6 thousand euros. So these are his stocks, I believe. IPKR, so that's on Interactive Brokers. So he has two, basically once again Vanguard, S&P 500, as well as Realty Income. So yeah, two stocks and ETFs that I own as well. The Vanguard S&P 500, you can never go wrong with that. And then Realty Income, my favorite REIT. They pay a monthly dividend. Definitely a solid company. Right now, they've been a little bit on a downward trend, of course. because the interest rates in the US and globally around the world are very high. So what it means is, same for you, right? Imagine you want to buy a house right now, you go to the bank. I mean, the mortgage, the interest you pay on the mortgage is extremely high. We got a mortgage now at 5.8%. It's crazy, right? So when you think your monthly payments are very expensive. And the same for those kind of companies. They are real estate companies. For them to grow and acquire new real estate, they need to borrow money. And that gets ever more expensive. So yeah, that's why they've been a little bit on the downward trend, but I think it's a good time because long term, I don't think real estate is going to disappear. It always in the past used to tend to go up over time. Plus, in the meantime, you get a nice dividend. I believe now I get 5.8% around. So yeah, in my eyes, it's definitely very attractive. But once again, some people like to buy REIT ETFs, to have different companies in there. I myself have 3 REITs that I hold. So that's Realty Income, VG Properties, and Agree Realty. But yeah, and then here's a few individual stocks over here as well. Yeah, I mean, basically most of them are quite known. What stands out, for example, HPQ. It's a company that Warren Buffett recently bought quite a lot of. I was quite surprised. By the way, you can follow those big investors because they have to disclose every quarter their stock buys. So it was shown that a few quarters ago, Warren Buffett, one of the arguably best investors in the world, bought it. I was quite surprised, to be honest, because I don't like the company. I think it's kind of a phasing out company. I don't see any excitement over there. And in the last quarter, what did he do? He sold quite a lot of it. So yeah, that just confirmed my thesis that it probably wasn't the best investment. But again, if you believe in it and you're happy with it, that's great. Other than that, yeah, I mean, quite a different mix of stocks. I'm not a big fan of holding Chinese stocks. Obviously, they're listed in the US, but still, they're China-based companies. Alibaba, was also the hype stock. Again, I'm not the biggest fan of that because there's just so much intransparency. I used to live in China myself. They show you what they want to show you. Let's put it this way. So again, it's very hard to really know the real numbers. And if even the numbers are real, if tomorrow the Chinese government wants to change something about the company or wants to take them over, what have you, that's it. Not much you can do, right? So yeah, I prefer investing into US or European stocks in that way. Plus a couple of more stocks that he has here. A little bit hard, once again, to track actually to see how much individually he has in each holding. You can see in Yahoo Finance, I would now have to multiply his shares times the price to get to the total holding. It's a bit tricky, but yeah, overall, yeah, I mean, solid portfolio. If you're happy with this, definitely not bad. And you can see 8.2K in the plus, so well done to you, despite having PayPal, which actually made a comeback recently. They dropped massively. But again, it's all the question of time, right? How long you hold on to something. Some stocks just, drop for so long and eventually make a comeback. By some others never come back. So it's always hard to say. But I think if you're solid, it's hard to know exactly and give you full advice because it depends how young you are, right? If you're close to retirement, I think it's a little bit, aggressive portfolio to have PayPal and some of those stocks. If you're younger, I think it's also good to take some risk, right? If you're 20 years old and you only invest into Pepsi and Coca-Cola, which has very slow, solid company, but very slow growth, I think there are better ways to go about that. What else? Then we move on to some more reviews over here. So this gentleman obviously is using Trading 212, which is a great broker. I use it myself as well. And there we can do something, it's called a pie. So basically a pie is your own ETF in a way that you create for yourself. And once it's set up, you can say how much you want to buy every week, every month, every day even, and it will buy it on your behalf. So that's a really cool option, obviously. And he has 2 pies. So one is sort of the US-based pie. So here, once again, he invests into S&P 500, 50% of whatever amounts he invests. I don't see that here, but whatever, let's say 500 euros or 1,000 euros, 50% of that would go into the Vanguard S&P 500. And once again, I don't give investment advice, but I think investing into that, you really can't go wrong. I think it really makes sense. Then we have Microsoft, Apple, again, the classics over there. They're anyways, some of the biggest positions in pretty much most of those ETFs, because by nature, they have the biggest market cap in the world. So definitely in a lot of the ETFs, there will be a big weighting in there. Then of course some other familiar stocks that I have myself also. Realty Income, once again, can't go wrong with that. AbbVie, pharma company, great. IBM is an interesting one. I'm not very excited about IBM, but hopefully, you know, they make a comeback. I was just looking recently at the biggest stock companies in the S&P 500 back in 1990. And I believe IBM was one of the top 3, top 5 biggest ones. So it's interesting how things change once again over time, which always gives me, you know, reassures me that investing into ETF is a very good thing, because who are we to pick the winning horse? You know, for example, Coca-Cola back in 1990, funnily enough, was I think the 7th biggest company. Now they're still doing well. I invest in them, but they are nowhere near the top, you know, 15 even. So it's very interesting how things change, and makes it even harder to pick the winning horses, so to say. Yeah, and then 4%. So I like how he splits it in smaller positions across different positions. Probably he's done his own work about them. He likes certain things about them. And that way it's set and forget it. He sets up his buy and it will execute those orders on his behalf. So that's really cool. Then he wrote me, he has a second portfolio, a second pie, where he invests in Swiss francs, which by the way is a very smart move. Probably he invests in the arguably 2 strongest currencies, the US dollar, which, you know, obviously is arguably the strongest currency in the world. But secondly, when you look at the Swiss franc development over time, I mean, they're very smart. I lived in Switzerland as well. I mean, they really know how to control their currency, their banking system and what have you. So having some exposure to Switzerland, especially if you live there, or you plan to live there one day, it really makes sense. I think you kind of keep a strong currency over there. And that way, once again, he invests into certain ETFs, iShares from BlackRock. So that's basically BlackRock, the money manager, their form of ETFs. They're called iShares. And he has a couple of them. I believe these are Swiss-based companies that are part of it. So it makes sense. Why not? Zurich, Swiss insurance company, very strong company as well. Swiss Reinsurance. I really like reinsurance. So these are insurance companies for insurance companies, and Swiss Re is actually one of the biggest ones in the world. There's also Munich Re. So these are really solid companies. I mean, when we look at their track records, they're really doing well over time. So I like it. I don't invest into Swiss companies because, again, for Europeans, it is a little bit expensive, especially when it comes to dividend payouts, because the withholding tax in some cases I believe is up to 30%. So yeah, it may not be the smartest move depending where you live, but if it works for you, and you also do it for the capital appreciation and the currency stability, makes perfect sense. And a couple of other ones you can see over here, all Swiss-based. So yeah, I really like that. It makes perfect sense. And yeah, well done to you to have 2 different pies. I love it. Thanks for sharing. And what else? We have 2 more to go. So that's another one somebody sent me. And they once again have 2 different pies. So one is an ETF pie and another one is an individual share pie. So I also like that approach. The biggest position I believe is individual parts, but that once again depends on your own preference, right? Are you risk averse? Then put more into the ETF. If you're young and you're excited to see some nice growth in your portfolio, put more into some tech growth companies, right? In this case, you can see €1,500 sitting across 2, I believe 2. There might be a third one down here. I can't see that. It looks like a Vanguard, but let's say across 3 different ETFs. And once again, the S&P 500, in this case, instead of Vanguard, it's from BlackRock. So either way, I think they're pretty similar in total returns. There's really no difference. Often what it comes down to is once again the expense ratio. So that's something you want to compare. Usually they're pretty much neck to neck, BlackRock, Vanguard and SPY. So yeah, I mean in this case, whatever you feel right, I think those 2, BlackRock and Vanguard, you really can't go wrong with them. And then we go to the, sorry, there's some more over here, my bad. So even more holdings. So they really diversify. Once again, I think it goes back to the first portfolio I reviewed. If you're really confident about them, 133 into an MSCI in India, I'm not sure what you expect from that. If you think like some crazy returns, I don't think it's going to happen. If you just want to have it for diversification, maybe. But again, I would rather then take that money, unless you really invest continuously into India and you see the long-term potential, which I also see as well. But then maybe a global ETF that has some exposure to India might be a better one. I don't know, expense ratio, if it's reasonable and you're really bullish on it, great. In my eyes, I wouldn't put the money, but if you feel comfortable, I mean, 5% is also not much. Even if it drops a bit, I think it won't make a big dent in your portfolio. And then individual holdings, obviously, as I said, there's a bigger position, 5.3K. And here you see quite a few more aggressive shares, obviously with Meta, which recently started paying dividends. So before I never used to buy Meta, but now that they started paying a dividend, even it's tiny. Well done, Zach. I like that. Good approach. I think more and more companies, as they mature, they eventually all start paying dividend, because that's how you keep people interested and excited, because a lot of dividend investors are out there. And if a company doesn't pay any dividend, you would never invest in them. So I think long term, we'll see more and more companies pay those dividends. Few more individual shares. Nvidia, if you imagine 1.1 thousand out of 5.3, it's quite a high percentage. What is it now? So that makes up 21%, obviously, as it says over here, of your portfolio from Nvidia. Obviously, it's also grown quite a bit, 255 euros in the plus. But as I said, for me, I would not invest into Nvidia, at least right now. I think it's already quite expensive. Some people say we're just at the beginning, it will go even higher, and maybe it does, maybe it doesn't. Nobody knows. I think they've done extremely well. I think their CEO is absolutely brilliant, such a smart guy. They came out now with their own sort of robots as well. So I really love how the company is doing and where they're going. But similar thing we've seen with Tesla, right? There was so much hype around it and people were religiously believing in them. But long-term sustainability is a different story. And as I said to you before with IBM, right? They used to be also the leaders in the IT and IT space, so to say. And then they dropped the ball quite a bit. So while Nvidia is definitely on the run right now, it's a very hot stock and they're really doing amazing things. I mean, I love the company as such. Would I invest in them right now to see another 10x in the near future? I don't think so, but who knows? That's why for my sleep at night, I have my ETFs and my various dividend stocks. For my emotional roller coaster, instead of having these hype stocks, I go with crypto. But again, everybody has their different liking. If you don't like crypto and you want to have a bit of fun to play with, then definitely, why not to invest into Nvidia? I think you can still make some money. I'm just saying, will they go 10x from here? If they already have a market capitalization right now of, I believe, what is it, 2 trillion, 10x will be 20 trillion. And if we saw them before, gold is 14 trillion. So, it's unlikely to happen anytime soon. And then a couple of other shares over here, nothing wrong with that, nice diversification. So I like that approach. It makes perfect sense. And it's a nice portfolio. Nothing else I can say here. And lastly, we have one more viewer who sent me her portfolio, just started recently. You can see still a very small portfolio number, but still, it doesn't matter. And I always say, people think when they start investing, I have people watching my channel, they have close to $1 million in net worth, and others, they're just starting off or never invested. So really, it doesn't matter. I think most important is that you start the process. So it doesn't matter the amount, but getting started and investing, getting a better understanding. Over time, naturally, your numbers grow, right? As you advance your career, you earn more money, you can invest it and buy more shares. When I started investing, I didn't invest as much as I do now, right? I invested very little money and I'm like, oh my God, I put 50 euros, it dropped by 30%. Oh my God, I lost 20 euros. It really hurt. Now, after many years of doing that and having obviously a higher income, if my stock in the portfolio broker is down, by a couple of thousand, I know it's just a theoretical value and I will continue to invest and use it as an opportunity. So that's totally fine. So really, really nothing wrong with that. Overall, once again, I like the composition. You go after the S&P 500. Vanguard seems to be very popular. I think for Europeans, I think it's actually the biggest ETF right now in Europe in terms of total capital inflow, the S&P 500. I spoke to the person, I asked why they have two different ones, and because you can actually buy a lot of the ETFs, they have the same ticker symbol, in this case VUSA, but you can buy it on different stock exchanges in Europe. You could buy it, for example, in London, mostly either in pounds or dollars. You could buy it in Amsterdam in euros, in Italy, I believe, in euros, in Switzerland in Swiss francs. So it's technically the same ETF based on the S&P 500, but in different currencies. So that person bought it in two different currencies, but eventually we spoke to sell one of them and invest in a currency that you mostly use, because you want to avoid that every time, if you, for example, buy through interactive brokers, you would have to have the exchange fee, and that starts adding up. So every time you trade, it would be 0.15%. It's small, relatively small, but again, that does add up over time. So I think there are better ways around it. So if you earn in euros and mostly you transact in euros, then why not buy the VUSA, Vanguard S&P 500, euro-based. I buy it in Amsterdam, so that way you don't have any currency conversion over there. And yeah, I mean, that's what I got for this time. So really thank you everybody for sending in your portfolios. Hope you found it useful. I will definitely be happy to make more of those in the future. I think it's really interesting also for me to see how different people invest, because it always shows there's no right or wrong, right? What I find right in my eyes, some other people look at it and say, oh my God, you're stupid. Why are you investing into this or that? You should not be buying LIGHTYEAR, for example, you know, a smoking company. That's going out of business very soon. You should invest into future companies, only AI and what have you. And I don't even argue with that, because I'm not here to convince them. Ultimately, I invest what works for me and I understand what I invest in. I think that's most important, that you understand what you're actually investing in. You know, how it turns out, only time will tell, right? Yeah, I think that's most important, to really feel comfortable with your investments, understand them, and then you also change as you go along. As I said, you know, when I bought back in the day a Bitcoin, honestly, the first time I just did it because everybody was talking about it as the future. I didn't really understand it. And then I lost a little bit the interest in it when the stock price dropped and I was about to sell everything, and I didn't really understand the fundamentals behind it. But now, as I said, I'm really deep diving into it and I really understand it. So I'm like long-term invested into that project. I'm really happy to support along the way and continue investing my hard-earned capital into that. You wouldn't do that if you just buy a stock because somebody on some forum told you to buy Nvidia, right? If you do that, I think you will very quickly also sell if the stock drops, and in the end you materialize a loss. And so yeah, I think that's very important to understand and have conviction. I heard a good saying where the person said, you can't borrow conviction, right? You can borrow inspiration and get excited about something because you read a nice article or saw a video, but conviction is if you hold on to something even in difficult times, right? And I think that's really the difference over there. Right, so let's go over a couple of questions which I got here. So let's dive right in. Tony, thanks very much for dialing in. Brian, I think for tobacco companies, it's, so maybe I can even highlight those. Yeah, that's cool. Let me dial it like this. Okay, I hope you can see those questions. I think tobacco companies, it's because some scientific studies prove today that even e-cigarettes, I think it's their new direction, are harmful and bad for cigarettes with nicotine. Yeah, absolutely. Thanks for sharing that. That's probably goes back to why LIGHTYEAR dropped today. And these articles keep on coming out, right? I mean, I don't think there's going to be many studies showing that smoking or even e-smoking is going to be good. So I think we're going to see more of that. But ultimately, I mean, I don't know how it is in your country, but when you go to Europe anywhere and you buy cigarettes, for example, I mean, it's disgusting. You know, they put the worst disease you can possibly think of on the picture. It looks bad, you know, literally showing you how your lungs might look like if you smoke. And still, people keep on buying this stuff, you know. So yeah, those studies will keep on coming out and still people keep on smoking. The same how people say how bad fast food is for you or Coca-Cola or what have you. And yet people for decades have been consuming junk food and will continue to do so. So that's why I'm buying them, because I know people will continue to do that. And I think LIGHTYEAR and other companies will continue to provide them with whatever they would like in the future. Daniel, thanks for your content, super helpful. Trophy, yellow smiling. Really appreciate it, Daniel. Thanks for dialing in. Always appreciate you having you around. Volcano, thanks for dialing in. We have Lipos. Good evening, guys. Sales today. I see headstrong and stay calm, no paper hands. Yeah, definitely. I mean, you know, as I said, if you don't have conviction and you see a drop in the shares, people panic. You know, often, you know, as soon as it's so funny. Just look at media, how it works, right? Once we see Bitcoin going up, people are very slowly talking about it. Oh, we see a new high, but when will it crash? As soon as we have a little correction, we went, you know, recently from $25,000 not so long ago to now 73,000, new all-time high. There was a bit of coverage, but now we went from 73 down to 62, 63, and everywhere. Crypto's crashing, it's going down, that's the end of it. So people like negativity. Negativity usually gets clicks, right? You see that on YouTube, you know, all these crazy thumbnails, they do get more clicks than if you say, you know, I'm today sitting in the nice sunshine and let me tell you a positive story. That usually doesn't get many clicks. So negativity sells. But yeah, once again, if you have conviction and you believe in something and you invest in it, I think you're going to be on the good side over there. Show us trading 212. I'm not sure exactly what you want to see. I showed you a couple of portfolios. I've shown also do my monthly portfolio reviews, so I'll continue to do more of that in the future. Realty income is not good individual. Better buy TRET. Not sure what is PRET. Maybe it's a REIT. Well, that's your opinion. I'm not going to change your mind. They've been around for 50 years in paying and increasing the dividend for over 50 years. So yes, while right now it's a little bit down, on the long term, the returns they produce plus the dividends, at least for me, it works very well. It's a nice dividend that I get every single month. It's something I can count on. It's still a small amount, but long term, as I continue to invest in them, I'm really happy with them. So that's cool. Manuel, thanks for dialing in. Ryan Williams, nice to see you on the live. Thanks very much. Good to have you. I mean, I love your content, guys. If you're not following Ryan Williams, the man, amazing newsletter also, Retire with Ryan. So yeah, really inspiration even for me to see what is possible with dividends. So great guy to follow. So really recommend that. Want to check my dividend portfolio? Yeah. Definitely send it through. I'll happily include it for next possibly next week's live stream. Manuel, I'm new to trading. Not sure if you see my portfolio makes a lot of sense or not. Listen, send it through. I'm happy to have a look as well. So definitely same as PZ. Please, happily to do that. Next week as well. What else? Raminta, thanks for sharing. Me and my husband planning to invest into shares and build up some extra money for the future. At the moment, we only invest into property and crypto. Look, Raminta, I mean, again, there's no right or wrong, right? I'm a big fan of diversification, so I don't believe into investing only one thing. But once again, even that theory, some people have different ideas. For example, Warren Buffett famously said, what he said, diversification is the lack of conviction. Because he said, if you're really convicted about a few stocks, why you need to diversify across 3,000 stocks, right? If you really believe into those 3 stocks, invest in it. So again, there's no right or wrong. I think what you're doing with real estate is always good. I mean, if you can buy real estate, either for yourself to live in or to rent it out in most places, and most times is usually a good investment. Now, like the markets, also real estates are going through tough times, right? Judging by your name, I believe you're probably in Lithuania. Right now the markets are a little bit expensive. Borrowing costs are high. So the yield you would get on the property if you were to rent it out are not very attractive. Versus when I bought in Dubai, my apartments I'm renting out there, I mean, the yields I'm getting right now is 8 to 9% net after tax. I mean, that's crazy. That's outperforming the S&P 500. Plus I have the capital appreciation in the long term, which already happened. But actually, when I bought it for a number of years, the market was flat and people said, oh my God, you wasted your money. And even I got really nervous. And luckily for me at the time, I couldn't sell it because I was locked in with the contract. I bought it off property, so I couldn't get out of it. Otherwise, I would have maybe potentially sold it. Now I'm super happy I didn't. So again, there's no right or wrong. If you're happy with this is great. Yeah, I think having property is amazing. Crypto, I think, depends on what you invest in. And if you feel comfortable with this, great. Hopefully not too many crazy meme coins, but if it's a bit of Bitcoin and some other things, I think it's good to have as well. And then in the future, you will see any spare cash that you have, you can just slowly start investing into the S&P 500. The cool thing is you can invest from as little as €1 in most platforms, the Trading 212, without any fees, €1. That's amazing. And then you start playing around and you will see, maybe I don't actually like that. Once again, shares are not for everybody. Some people only like real estate. That's totally fine. So I think there's something for everyone out there. Tony, which one do you think is better for long term, FTSE All World or S&P 500? Look, I mean, I might be biased because I invest into the S&P 500, so I would go with that. I understand people wanting to invest and diversify globally, but once again, if you go back to that one, I can actually pull it up over here. I think I pulled it up already before, but one second. VWCE. I think that's the one we had, yeah. So basically, no, that's not loading. But once again, you have to check the expense ratio. In my case, that's the one actually, yeah. So 0.22% for me is way too expensive. In the end, I still have the majority of the holdings are coming from the United States. So actually it goes back, to my first portfolio I've shown. So, for me, it's very clear I wouldn't invest into that because A, it takes already away from my profitability, and B, most likely the US is still going to be the strongest position in that portfolio. So ultimately, it's your choice. If you feel more comfortable being diversified and you see the future is going to be in Asia, which I think it is. Obviously Asia is going to do very well. But I also don't think that America is going to disappear. If America was going to disappear and drop completely, I think that would have global repercussions as well. So in my eyes, I'm going with the S&P, but you do you and see what works best for you. Watching your videos gave us a good understanding where to start. Appreciate it. Thanks very much. That means a lot. Always makes me happy. That's really nice. When you can actually make a difference in people's life. It's not only for the views and likes. I mean, obviously that helps for me to monetize and make a living. But generally, I'm so happy to hear when people say, thank you for helping me to invest, because that's the hardest step, is to start, right? And when I started, I didn't really have too many people to handhold me. So I really want to be very transparent and simplify things, because often people make things way too complicated about investing, and actually investing, it's so simple. So I'm happy to hear that. What else? Someone living in Europe, which broker do you recommend? I made a few videos on that. Please check them. I mean, there's a number of good brokers out there. I usually also list them. You find them in the description down below, because I usually link to things and recommend things that I use myself. So all the brokers you find there are the ones I'm using. Now, the biggest portfolio that I have is with interactive brokers. But if you're a beginner, it might be a little bit overwhelming. It's not a very pretty interface, not at all actually, but they have a lot of really good benefits. If you're just starting off and just want to get started, I think trading 2-on-2 is an amazing option. But yeah, play around with it. As I said, I made a video on it. Check it out and see what works best for you. Where do you see Bitcoin in 6 months and 1 year? Well, definitely higher, I would imagine. Even though 6 months might also be lower, I wouldn't be surprised. So I don't even consider 6 months or 1 month or 1 year, because I really believe that long term, the benefit and most strongest selling point for me is its deflationary value. Most other currencies we have an inflationary value, what we see right now, right? If, for example, you bought a house for 100,000, it's worth now 200,000. The house didn't produce more value. Actually, what happened is the fiat money in dollars or euros also lost a lot of more value. So that means in the future, you will have to spend more of your money to buy that house, or somebody else has in this case. So yes, you have a bit of appreciation happening, but in many cases, the deflation of that money, of the money is much worse. So that's what I like about Bitcoin, that you have a deflation, because overall there is not going to be more supply. The government can't print more of it. There can't be more produced. So that way people will fight, because there's going to be demand. They will fight over how much. Oh, we have a special guest here, little Nutella stopping by. Hello, my financial advisor. Hello, how are you enjoying the stream? Yeah, she also doesn't know the price of Bitcoin. But yeah, so what I'm saying is that basically I like that it's a deflationary pressure on Bitcoin, that they can't make more of it, and that over time, as people want it, will drive the price up. And there's always somebody selling, right? People said, well, if nobody sells, so how will transaction happen? Everybody will sell at certain prices. If tomorrow you were holding 1 Bitcoin and it would go to 500,000, would you sell? Well, if you don't, but a lot of people would, and take that money and buy a house from it or do something else. So I think it's always a question of price. So yeah, again, I could make a whole video, and I will make more videos on Bitcoin. What the price is going to be the next few months, I don't know. Nobody does. But long term, 5 years, 10 years from now, I think, honestly, I wouldn't be shocked if we go to 500,000. I think they said if it will take over from gold in terms of total valuation, that will be around $550,000 or $600,000 per Bitcoin. Then the market capitalization would be the same as gold. And as I explained before in another video, it's the Veblen effect, right? As Bitcoin continues to increase in price, more and more people will start taking it serious, because they say, wow, if it's worth 200,000, maybe it's actually really serious and I should start invest. So I think overall, as it grows in value, more people will get excited about it, and that will take away some of the money that they would have otherwise maybe used into gold. And that's anyways the older generation, which will slowly phase out. Younger generation, myself and others, I mean, I couldn't care less about gold. Like seriously, I would happily, as soon as I get gold, sell it and put it into something else. Because for me, it's just absolutely useless. It's just sitting around. I would have to safeguard it somewhere. I can't carry it. If I go to another country, it's very cumbersome. And I think more and more we'll see that shift. So as the money flows out of gold, I think it will flow into something else. I don't think it's going to be some individual shares. Some of it will go into ETFs, of course, but more of it will also go into cryptocurrency in general. but particularly into Bitcoin, especially we've seen now with the ETFs that brought a lot of new inflow. You know, my parents or a lot of people's parents, they don't feel comfortable buying and owning and safeguarding their crypto on a Ledger hardware wallet or other hardware wallets. But to buy an ETF, like we've shown today, it's way easier. So I think that brings more people to the equation. My goodness, sorry, it's a little bit sunny now, so I'm a little bit blown out. Let's see if I can fix that a bit here. But yeah, hope that answers your question. News follow always the market, not otherwise. 100% agreed, definitely. Tesla is Tesla worth investing, or is it going down near the future? Again, $1 million question. I don't know, nobody knows. I personally don't invest in Tesla because I think it's way too much of a roller coaster ride. I mean, one wrong tweet from the CEO and the company can go either way. So yeah, it's a lot of hopium baked in already. When you look at the valuation, you know, the multiples they have on the revenues produced, I think it's crazy. But again, you know, sometimes crazy is good and people want to make money. If you trade, if you want to move in and out of positions, either day trade or swing trade, I think it could be a really interesting stock because it's very frequently traded. Swing trade, if you buy a short share or company and hold it for a couple of days, maybe 2 weeks, and then sell it at a profit. Now, a company like Coca-Cola or again Pepsi, there's not much volatility because they're very flat. You know, maybe 1% up, 1% down. So it wouldn't really make sense. Tesla, on the other hand, you could buy. There could be some crazy market movement. You make your 7, 8, 10, 12% in 1-2 weeks, and you sell it, right? So if you're looking into trading, I think it makes sense. As long-term buy and hold, honestly, I don't think it's the best choice, but again, you do you. Super chat, what is super chat? Wow, this is first time, let me see. Wow, somebody, that's amazing. Thank you very much, I really appreciate it. That's very kind. I mean, wow, never had that, somebody actually sending me money on the chat, so appreciate that, it's very kind of you. Thank you very much. What stocks would you suggest for future value? Many say Amex, but I'm concerned about the credit bubble. Yeah, good point. I mean, I know a lot of people love those credit card companies. You know, when you look at also Visa, MasterCard, I mean, incredible companies. To be honest, the way they're still progressing. I mean, let's pull it up actually. 1 second. If I go into, bear with me 1 second, just trying to pull up those companies. Amex. Actually, let's pull up one of these other companies. Visa, I'm seeing here. 1 second. Right, so for example, when you see Visa, I mean, for me it was such a boring company, but actually they're so profitable and still bringing in like crazy returns. And I always like to look at the momentum, comparing it to the S&P 500. So when you look over here, over the last 10 years, it doesn't pull it out over here. Oh, sorry, that's the wrong Visa here. Visa is actually a very good one, symbol V. My bad, so I put the wrong one. So that's the right ticker symbol here. So if we compare now over the last 10 years, I mean, you can see that basically S&P 500 returned 234%, while Visa returned 487%. I mean, it's just absolutely mind-boggling. It really crushed the S&P 500, which is not easy to do. Most companies underperform. So a really interesting one. You see the market capitalization right now, it's 583 billion. So, you know, when you compare that to Tesla, which is actually quite interesting. Where is Tesla? We see Tesla. Let me pull up Tesla over here. They have a market cap now, actually the same market cap. Okay, they came down. Obviously, you can see the price. It used to be way higher. I remember they were over 1 trillion actually. So they came down quite a bit. So I also believe that long term, those companies, they will have to obviously develop and go with the times. I think we'll see a shift in terms of their business models as we start embracing more crypto. They will also get competition more and more from other payment providers. Right now, Apple and PayPal and Stripe are using those credit card companies as a sort of gateway to sell their things. But I think long term, we will definitely see a shift where they will come up with their own peer-to-peer payment method in a way, right? As we go to blockchain payments, you don't need that intermediary anymore, such as Visa and MasterCard. So again, that's just my speculation. I don't know, I might be wrong. They might be here to stay. I think they're still going to be here to stay for many years. But once we go into digital currency by countries, I will think they will take care of their own payment processes in a way. I don't think that Visa will work with the US government on transacting on their native digital token, whatever it will be. But again, I might be wrong as well. So while I wouldn't invest directly into them, as they are part of the S&P 500 and still quite a high position actually, I naturally continue to buy them and yeah, quite like them. But I wouldn't invest into them individually. Yeah, Ryan, once again, really enjoy your content as well, your inspiration. Yeah, thanks very much. But I still have a long way to go to reach to you, but you're definitely a real inspiration for me. So keep up the good job, mate. Tim Rose, please do more videos about real estate. Thanks very much, well noted. I will definitely do that. Seems a lot of people are interested in that. I think hopefully, well, I will be back to Dubai next month. So I will think to do more real estate videos over there in general, and really also showcasing different properties, maybe interviewing some different people. Because I think it's really interesting. People ask me where to invest. And I think Dubai is such a melting point. I think it really makes sense. And probably if you look at net rental and returns, that you can get, I think it's probably one of the most attractive markets right now still, even though rents have gone up and prices for real estate have gone up. I think it's a really exciting place, and so I'll do that, plus of course in general more videos about real estate, because I'm not just a channel about crypto or about dividends or ETFs. I really want to diversify and show what I do, right? I'm definitely no master, no guru. I make many mistakes myself, but I want to document my own journey. Hopefully it will be interesting for you and you learn from my mistakes probably, but that's why I don't want to be just into one niche. Probably it would be smarter if I just focused and become the ETF go-to guy or the crypto guy, but just myself, I like to invest into different things, so I like to showcase that, which sometimes makes it a bit hard because I know when I talk about real estate, I bore some of the people who are really coming and joining and watching the channel for crypto content, but I try to obviously have different content for different people and mix it up a little bit. Nelson, if you had the cash for a house, would you get a mortgage or pay cash for it? Well, good question. Right now, given the mortgage rates, you have to ask yourself, the opportunity cost. If you take a mortgage right now at 6%, one school of thought is, can you get a higher return than 6%? So let me put it this way. If you could get a mortgage, which you used to do back in the day, at 0%, or 1% or 2%, it's a no-brainer, right? Take the mortgage, because the other money, the capital that you have left, that you didn't invest into your house, you can invest into the S&P 500 or other places where you get a higher return. Right now, if you pay 6% interest, and you get 8% on the S&P 500, it doesn't make sense, right? So in that case, if you have the money, definitely pay off the house right away. If you feel comfortable with that, and you still have an emergency fund, that would be my option. If I had so much capital sitting around, because for the extra 2% I would get in the stock market, it's not worth it for me, because that might also come down if the recession continues. So yeah, in my eyes, if you can afford to pay it off right away, which I did myself for my Dubai real estate actually, without any interest, so that really helped me, because funnily enough, right now we're buying another property in Lithuania, and the interest is 5.8%, as I said. I mean, for the first few months we're only paying interest, we're not even paying anything of the mortgage. So I think the first 3 years or so, it's pure interest payment until we finally start paying down the mortgage. I mean, it's crazy. It just pains to pay the bank the interest. So I'd rather, if I had the money, pay it all off, be done with it, not be able to invest. But obviously, I could save the money on the interest and then later on start accumulating some money to reinvest into the stock. So again, it depends on the situation we're in. If we're in a 1, 2, up to 3% interest environment, it makes sense to take a mortgage. Otherwise, probably smarter to buy it off right away. Sex doesn't go. Thanks very much. Dubai treats you well. Well, actually, right now I'm in Tenerife. So yeah, honestly, it's a nice island, but probably if you're 60 plus, yeah, I'm now in the phase of my life where I really want to start building things up and really excited about, what life has to offer, building my own business. So for that, Tenerife is definitely the wrong place. We booked it before going to Dubai somehow. Don't ask me why. After leaving my job, we thought it would be a good idea. But yeah, maybe it would have been smarter to come here before going to Dubai. But now, having been 1 month to Dubai, back to Tenerife, yeah, it's very slow here. It's chill, it's nice. But we're very excited to move back to Dubai very soon. So yeah, that will be nice. What do you think about the European Union finding Apple and other companies? honestly, it's very sad to see for me. I mean, I think, you know, EU is very good in coming up with regulations, which, you know, some of it is probably good. You know, some of the data laws and so on, don't get me wrong, probably are needed. Because the other extreme is, you know, in China or other places where there's no laws around that. So as a citizen, you have zero laws. So probably good to have a bit of that. But I think what we're doing is, once again, way too much regulation. We're fining everybody, and that just hinders progress, you know. You know, how many great new tools and startups do we actually have in the EU? Because to comply with all these laws and what have you, it's very hard to actually succeed. And that's why a lot of the, you know, the venture capital and so on goes to the US, even now to Dubai. How many startups they have coming out, you will see in the coming years. You will hear a lot coming out of the UAE because they have favorable rules. In the EU, we are very good and coming with fines and so on. So I'm not a big fan of that because I even believe, yes, I understand that people want to keep monopolies down. If for example, I mean, the story of Apple Store, right? A lot of people complain that as a developer, they have to pay a fee every time somebody downloads or uses their service through the Apple Store. And I look at it and think, yeah, I understand that. But on the other hand, that's the cost of doing business, right? Because, you know, they provide you a platform to reach those people. If it wasn't for Apple being there in the first place, they would never reach those people, or it would be much harder. They would have to spend the money on running Google ads or other ways to be seen and used by users. So the same, you know, as I was running a five-star hotel in my prior career, you know, we had those costs that we paid to booking.com, and I was always very upset about it because it can be a huge chunk. I mean, in some places, depending on the city, up to 30% as well. But on the other hand, if it wasn't for booking.com, same story, right? We wouldn't be seen. People wouldn't find the hotel and book something else. So I think, you know, I'm not a bigger fan of there should be some regulations in place, but just fining for every single thing, I think it keeps people away from doing business there, and ultimately, you know, they will give you an inferior product, or they look for new markets. And obviously, they can't get around having European markets, but still, I don't think it's the way to go. I would hope that the EU would be more encouraging, you know, startup companies and have a more open, supportive growth economy rather than restrictive and punishing economy. But that's just my humble opinion. Could you explain your preference towards S&P over the Nasdaq, given you believe the technology sector holds significant potential for the future? Look, I mean, there's nothing wrong with the Nasdaq. You know, I think the Nasdaq is fantastic. The 100 tech companies listed over there. It's just, again, right now I feel we're a little bit in the technology bubble, even though I think the future will be technology driven. But what about a lot of the pharma companies or some other companies? And if I invest into an ETF, I want to sleep, as I said, peaceful at night. And technology comes and goes in waves, right? If they all do well, great. But a lot of times also we've seen when it doesn't do too well, right? We've seen the dot-com bubble back in 2000 and other times. So if I invest into an ETF, I want to have a diversified approach, and that I have much more with the S&P 500, where I have all different sectors in it, rather than just tech sectors. That's why I think if people want to mix it up and have both, I think that makes sense. But if I only had the tech ETF and no S&P 500, for me it will be a bit too volatile. Already quite risky with my Bitcoin holding, which is actually my biggest holding apart after my real estate. So, you know, in that way, I don't want to have extra risk on top of it. Returns probably could be higher in the coming years. I have no doubt about it, but I'm happy missing out on that, knowing that majority of my money is definitely, you know, arguably safer with the S&P 500. Nelson saying he's following Ryan. Great to hear, definitely a smart guy, and he's worth following for sure. And one of the good guys. There's so many scam artists out there also, which you have to be careful who you follow also. So that's definitely one of the good guys for sure. Okay guys, how long we've been? Almost 1 hour, so I don't want to keep you from your weekend, but thanks for still hanging in there. Nice to have so many around here. Can't go wrong with Visa, for sure. I mean, as I said, you know, I am not invested myself, but I totally get it when people do, because it has a lot of potential for that, for sure. What else do we have? Thanks for dialing in. Oh my God, I struggle to pronounce the name. Shalambos. Hope I got it right, but thanks for joining in. Are there any fears in Dubai regarding the future war between Iran, the US, and how it will distribute daily life in Dubai? Look, I mean, Dubai is in a very volatile region, right? It always has been and always will. It's, you know, the melting pot of the world, if you so want. But, you know, look at the world right now. Where do we not have any difficult times, right? In Europe, I mean, being based in Lithuania for the last 7 years, our not so friendly neighbor definitely worries a lot of people, and people are worried, and they're moving some of them away because it's worried. In Dubai, it's actually not that close to, let's say, Israel and Palestine right now. With Iran, a different story, but these have been going on for a long time. Honestly, if you ask me like that, I'm not worried, because I think the region is kind of almost in a bad way to say that, but accustomed to having conflicts constantly. But I think also at the same time, UAE is almost at the point now where it's seen as the Switzerland, you know, because so many different countries from all over the world park their money there. They'd be stupid to attack it, because ultimately, you know, they will do themselves a disservice. So I think in that way it's sheltered. Usually the UAE itself, at least majority, remains to be politically neutral. I really liked one of the visions I saw from the Sheikh himself. He said, you know, we're politically neutral and business first country. So I really love that, business above all. Even with what's going on, you know, they're still having relationship with Israel, you know, and other countries that maybe are not so friendly to them. So it just shows they're really very much business driven at first, which I like, obviously. So I'm not too bothered. You know, anything can happen in the world. You know, when you look at Taiwan, China, what might happen over there. You look at Europe, we have so many boiling pots. So there are a lot of doubts and uncertainties. But the same is in the crypto space. The same is with stocks and ETFs. The recession is looming. So there's no ever 100% guarantee, but for now, you know, I feel very comfortable living there. I don't see anything is going to happen, and if I can, I will buy more real estate there for sure. Good. And yeah, maybe last question for today. Will you do another episode again where you review the portfolio? Absolutely, guys. I really enjoyed it. Hope you did as well. So please do send me your portfolios either by Instagram as a DM or via my email. You find my email down in the description below. Happy to get it. You know, you don't have to disclose your name. Even you can hide the total amount if you want. I just need to see the percentages to know what it's composed of, and I'll be happy to do that in the future. So I will absolutely do that. Guys, thanks very much for joining. I know it's Friday, maybe not the best time. Probably have to work on my times for the future. I think Monday is the best. Let me know what is the best time for you guys. Maybe Monday would be a good time for that, but I really enjoyed it. Appreciate you, and wish you all an amazing weekend ahead. Make the most out of it. Don't just waste it. Work on your dreams to make it happen. The harder you work, you'll have higher income, because people always focus only on investing. In order to invest, you need to have money. So if you want to make money, start working on your business or do more in your career to get a salary promotion, to have more earning potential that you can then invest and make your money work. But it starts by having money to invest, not invest money. It's not the other way around, basically. So guys, appreciate you all. Really, thanks for dialing in, and wish you a beautiful weekend. Catch you all later. Ciao.